Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. All right, everybody, let's take a look and see what happened in the stock market today. As I'm doing this video, Friday, the 14th, January 14th, the market's about to close. At least the intraday is going to close in about 3 minutes. So that's what we're looking at here. I said a few days ago that I didn't think that I wouldn't be surprised if the market came back down going into January 13th. And what's today? The 14th. And what happened? Babamski. Guys, these cycles are like right on the button. Okay, that cycle I think said January 13th. Yeah, and today's the 14th. Okay, you really can't ask for better. I said back here on this candlestick right there that is either this one or this one. I said I don't think it's done yet. I think there's more price decline to come. I think I even said there might be a little bounce, but then it's going to come back below the 50. Well, sure enough. Okay. And there you go. Absolutely nailed it on this cycle, guys. Look at that. Right on the kisser. Boy, that's just good stuff. Okay. If you want cycle analysis, now I may not always hit it this good. We got it on the 10th, and then we got it again on the 13th and 14th. And if you want this type of analysis, plus I cover other futures products and commodities like not just S&P 500, but crude oil and gold and natural gas and wheat and oats and live cattle and feeder cattle. Okay, I cover all that. Okay, with the premium members, which is what you see on the screen right now. So just below this video, you can join. First, make sure you're subscribed to the channel. You got to first be a subscriber, so subscribe. Okay, and then after you subscribe, come back to this video or any of my other videos, and you can click join below the video. Okay, and that's how you become a member. It'll take you through the process. You can join. $5.99 a month, guys. $72 a year. I mean, it's ridiculously cheap. Okay, I made it that cheap so everybody could afford it. Okay, I'm not one of these guys who goes, $300 for my course. Okay, this cycle was absolutely nailed. Okay, absolutely nailed it. So just looking at other cycles coming up. Okay, there goes the intraday just closed. But of course, the futures market will continue on till 4 p.m. Central Standard Time here in the great state of Texas. Now, I talked about this, I think, 2 days ago, which, by the way, I'm going to cover all the futures products today. Today's Friday. I'm going to cover all of them. So for you premium members that are watching this, look below the video, in the description below the video. There'll be all the links for all the different products. Okay, all the futures products and commodities that I just mentioned. Okay, you know, the S&P 500 hourly, the crude, the gold, the grains, the live and feeder cattle, all of it. The links are below this video. So if you want to jump to a particular commodity or futures product, you can. Okay. So anyway, back to the video here. I was talking about last few days. I've been looking at this, and I said, you know, I expect the first week of February, which is approximately right in this area, from about February 2nd, okay, 2-2, out to about February 9th, okay. Okay, for my international friends, I know that you do I think you do the month first, then I think you guys all do the month first and then the days, right? So for my international friends in Europe and the rest of the world, I think you do it like that, correct? Okay, so take your pick. All right, maybe I'm wrong. That would be September. I don't know how you guys do it. Never mind. I'm just screwing things up here. Anyway, February 2nd through February 9th. Okay. So that area right in there, I think, is a pretty good chance. Let me clear the screen. Whatever prices are going to do, let's say they do that. I don't know if they're going to continue to slope down like that, but they might. Okay. You know, I think we'll get price decline down into that time frame. Okay. Right in there. Now, I'm not saying it's going to come all the way down here to 4,500. It might, whatever. Okay. But I expect some type of either price stall or price decline. So whatever prices are doing. Okay. Now let's get into this a little bit deeper. Okay. This is for everybody. Obviously, general public's getting this part of the video, right? So here's the middle of this cycle. Let's do the big cycle. This is a big daily cycle. Okay, we obviously have I have two little cycles in here. They're a little bit skewed, right? They're not exactly perfectly in alignment. But over here, where this cycle and this bigger cycle, these are both daily cycles, by the way, they're coming together like that. Okay, that's a good chance of price decline. So anyway, the middle of this green cycle, let me just draw that cycle one more time, okay, is about right there. So what's that date? January 17th or 18th, okay? January 17th or 18th, right there. Which today is the 14th. So once we get to the middle of this cycle, January 17th, 18th, you know, we'll start really paying attention to the price action in the S&P 500 as it gets closer and closer to that first week of February, right? Because as you get to this side of the middle of this big green cycle, the chances become greater and greater that the price is going to start coming down. We'll just have to see how much. It may be up here and then come down. Okay? It doesn't really matter where the price is necessarily. Just be aware as you get into February 2nd through February 9th that there's a chance for prices to decline. Wherever it's at, let's say a week before that. It's like the last week of January. So like maybe January 23rd or 24th or somewhere around there, 25th, you want to start paying attention to the price action starting to come down, right? Whether it's down here, whether prices are down in this area coming down, whether they're way up here coming down, doesn't really matter. You can take advantage of those price declines because I think it's going to happen. All right. Now, since I love you guys so much, we're going to go and look at the monthly as well. Let me switch over to my drawing set for the monthly. Okay, remember, this cycle I have ending on the monthly chart June. Okay, maybe the end of June. So the middle of the summer. Okay. And we've had price divergences going on for months. Okay. So the red dots on both these indicators are saying that prices, even though prices are going up, we got divergence going on. Okay. So I expect prices to come down going into the middle of the summer of 2022. We might even get that 1,000-point decline I've been talking about. We'll see how it turns out. But I think you're going to get some relatively significant price decline going into the middle of 2022. That's what this cycle is telling us. Okay. Let's back out here a little bit. Let's back out. Let's look. Do these cycles make sense or don't they? Yeah, they make sense. Look at this one. This was over here in 2015. Look at that. Here's one in 2009. Everybody remembers that one. Karbabamskis. 2000, I think this was 2002. The lows in 2002, 2003. This one. All the way from over there. Years in the making. Same with this one. All these are like two years in the making. Okay, this one was whatever, maybe like a year and a quarter. So guess what? Guess what? You don't know what I'm going to say? Well, I'm about to tell you what I'm going to say. I think that this price decline, just on this chart, that's 1 year right there. That's all 2022. And I'll just skew it a little bit up to the top. That's 2023. Okay? So future is going this way, guys. Right? We're obviously right here. And we're heading that way. So I think we're looking at probably a year or two's worth of decline. It could happen faster. We may get a big flash crash. That could definitely happen. But I could see it happening like that, okay? Down here to 3,500. Maybe even 3,200. Okay? So, now granted, we may not start declining from right where we're at this 4808. That may not be the all-time high. It could be. Okay? I'm so sick of hearing about all-time high, guys and gals. I don't give a hoot about all-time high. It doesn't mean a damn thing to me. High, low, left, right, in, out. I don't care. Okay? Just take advantage of the price action. All-time high. Who cares? Okay? Who knows what Federal Reserve is going to do? And I know some people don't like me getting political, but, it's almost impossible to not bring it into the conversation. Because the Federal Reserve, in the past, every time they try to squeeze, right? And every time they try to raise interest rates, the stock market crashes, and then the politicians and other manipulators scream at the Federal Reserve, and then the Federal Reserve backpedals. Right? So, they say one thing and do another just like that. But this time, who knows? Maybe they don't have a choice. Or maybe they know exactly what they're doing and they don't care if the U.S. economy crashes and burns. Who knows what they really think behind closed doors, right? So anyway, my point being that currently, okay, just theoretically, if that were to continue to do that, right, it doesn't really matter. The point being that the distance between there and there is all we're really talking about. That distance. It hasn't changed, or you can even think of this one as amplitude. Okay, it hasn't changed. Okay, but it will. And what's eventually going to happen is this, on the monthly chart, we're still on the monthly charts, hang with me on this. What's eventually going to happen is this is going to start to kind of flatten out and roll over, and this is going to start coming down. Okay, and eventually they're going to come together. Okay, right there, I'm just eyeballing this, that's like 3,800. Okay, I think it's going to be more than that. I think we're going to come down below 3,500, somewhere in here, like 3,200, 33, 34, somewhere in that area, okay? So 2022, 2023, yep, somewhere in the middle of this summer, looks like it's something significant going on there. Maybe we'll get a big portion of that decline, the first big wave down going into the summer. All right, enough of that. Let's move on to the weekly. Let me change the drawing set. Now, I don't really, the weekly, ho-hum, I don't really. The next weekly cycle low is May 8th. That's what I got on here. Which is about 5 weeks, no, more than that, sorry. It's about maybe 7 or 8 weeks from that big June cycle on the monthly chart. So this weekly cycle is May 8th, okay? And the monthly chart is like kind of the end of June. So that's a good almost 2 months, maybe like 7 weeks difference. Okay? So they're not perfectly in sync, but it just goes to show you that I think we could get that big price decline anywhere from May all the way to like July. That's what this tells me. If I look at both the weekly cycle low coming up in May and the monthly low coming up at the end of June, that just tells me we could have a significant price decline May through like July. And remember, when I say price decline, that's the low area. So prices would have to be coming down, right, during that time. It isn't just going to do this and then drop straight down. You follow me? It's not going to do that, at least not most likely. All right, so I don't really take too much off this weekly chart because it's just garbage. I just look at the cycles. How much time? For those who don't know what cycle analysis is, that's basically just time. From here to there, that's an element of time. And then another cycle. You see price lows tend to happen when cycles come together, okay? There's a lot more to that, but I'm not going to dive too deep into it right now. Okay, as I mentioned earlier, for those that want the hourly chart, which I'm about to switch over to, pay for the $5.99, okay? Pay for $5.99. One of these days, I'm going to put up a website, and all the premium members, you guys can come over to the website instead of being on YouTube. That absolutely is the most deplorable, ridiculous platform. Charging me an arm and a leg just to have premium members is ridiculous. And guys and gals, the reason I say that is because I'll actually pass some of the savings on to the premium members. So instead of paying $5.99, you might pay $5.25. As if it could get any cheaper at $5.99, but it could. I could actually slightly lower the premium membership rate. So who knows? I'm going to maybe over the summer or something, I'll try to get that done. All right, that's it. Everybody subscribe to my YouTube channel. Give me a thumbs up. I really appreciate that. Don't forget to click that little bell to be notified of all the videos I put them out. For premium members, we're going to switch over. You'll get another video for all the futures products starting right now with the S&P 500 hourly chart.